All right, let's jump in. Thanks everybody for jumping in today. I just want to pick up where we were left off yesterday a bit, uh, and we'll jump into it. So yeah, we were just talking about Tesla in the Discord, so I have Tesla up on the screen here, just looking at where it is. We won't get into too much stocks today. I want to get more into trading, but this is not a good-looking week for Tesla. We had this symmetrical triangle. We broke to the downside yesterday, and then today just a continuation of that. Now you are at the 200 moving average and the 3 ATR at the lows of today's session and jumping into a little bit of an oversold territory. So it's possible Tesla might get a little bounce here. It may trend sideways for a bit. I would never jump in on the day that it jumps down, because you might get a little bounce and then a little bit more of a sell-off. I still think we could head lower on Tesla if we also take a look back here at this previous high as a level. Let's see what happens when we bring that across. So this was a previous pivot point resistance level. We came down, hit on it. We came down, hit on it again, and then today we slammed right at it. So technical analysis does work to an extent here as well. So we can see that Tesla just came down, slammed right on this previous resistance, which has held up as support a couple of times. That's where we slammed today. Can we break through that? Possibly. We'll see what happens with Tesla. Not getting any bounce on the session today. Overall in the markets today, pretty good down day overall. So what SPY is down only about 0.8%. So I think it feels worse for a lot of people because things are down, but SPY is only down 0.8%. If we look at oil, I mean, that one's up 2.3% right now. So oil having a pretty decent up day, breaking out of this little consolidation range that we've been in. So oil moving up. The bigger problem on oil is also the fact that oil volatility is up 1.3% as well, to a new high, back to the 3 ATR, at least a new recent high here, not a new all-time high. So oil is up 2+%, and oil volatility is up 1.5%. Gold volatility is now up almost 10% on the session, while gold itself is up just about 1% on the day. So not a huge move in gold. It's only 21 points on a $2,000 product. So it's not a massive move in gold. However, gold volatility is up almost 10%. So a massive up move on gold as far as volatility goes. And then if we look at the regular markets, taking a look at volatility up to about 20 here on the VX, or the volatility index for futures. So we're up to 20, which is decent. It's still way below where it's been. It's right about the 50-day moving average on the weekly, and still well below the 200 moving average. So still well below the 200 moving average. Volatility is done. So yeah, if you're only in a 112 on oil, fantastic, bully for you. For those of us in strangles or something else, now I do have 2 naked puts and 2 112, so I'm pretty happy about it overall. Again, so let's keep running, but volatility is up on the session overall, which is not necessarily a bad thing, and it's still way below its 200-day on the weekly. So nothing exciting there, and it's just over the 200-day on the daily chart. So moving up, so volatility is increasing, something that we will keep an eye on as well. All right. So let's jump into it, and let me switch screens and jump into our account. And this is where I want to spend some time today. And I want to talk about what we've done, what some of the moves were that we made and why we made them. Quick review on the Aussie dollar. It's almost flat on the session. So it's doing fine, up 230%. Nothing to do on the naked puts here. And we're really not seeing anything on the PDS right now. So this put debit spread portion not really doing anything except decaying a bit. So nothing to do there. 6E, we do have a strangle on. This is a fantastic day for strangles. So we're watching 6E moving up nicely on the session. It's up 0.5 percentage point today, so up 0.5% on 6E. We're up nicely on the day on that particular trade. This strangle's up 17%, so doing totally fine there. Now let's jump into oil. A little bit more excitement on oil. So some oil strangles. What do we got? So we got one oil strangle that's up about down about 182%. We're not quite at the stop loss area there. Let's take a look at where it is. So because oil, again, it's fractionally moved. I mean, it is up 2% today, but it's really 2% on a $88 item. Not a massive deal, but let's take a look at some of the analysis here and see where we are. We talked about this yesterday. Let's go through this today, and we'll look at some adjustments on some of these things. So we'll take a look at some strangles. What can you do on strangles? And it's really the call side that's getting jammed up pretty good. It's still 100 call. I'm still 13 points away on that call, but overall, that's where we're getting hit the most, is on the call side. So this is the 59-100. 59-100, and here is that particular strangle. Hard to fit the whole thing in, but you can see we're still, I mean, we're not dead center, which would be somewhere down around here, around like the $80 level, but we are at 88, so we're a little bit off center. It's getting close to a 2x loss, but we are nowhere near the strikes. I mean, we are still 12 points away, okay, on an $88, 87, 81. So 12 more points is another 14% before we even get in trouble on the strikes. Again, because volatility is up on here, and we're looking at a nice jump in volatility, but we are at recent highs. It's the highest volatility we've seen since March. Your IV rank is about 67, 68 here. I'm really hesitant to want to close some of these things with volatility spiking the way it is and us not near the strikes. However, I'm also hesitant to not take something off that we have here. When we take a look at these as well, let's take a look at the table on this, and let's jump in. A couple things I want to look at here. December 14th, and let's look at this $100 strike. So where is the delta on this? It's not even at a 30 delta yet. So I'm probably pretty hesitant to do anything when we're not even at a 30 delta, which would be another, I don't know, which would probably take us up even more. We're only at a 26 delta on this. So until we get to probably closer to the 30 delta, I'm not too worried about doing anything on it. I'll probably hang on. Is that part of the trade plan? Technically, it is not. Do I like to adjust a trade plan in the middle of a trade? No, that's one of my rules. However, I am taking some of the data that we're seeing and this rise in volatility in play. If it hits 30, and I think this was a question that Richard brought up about GC strangles. If you hit the 30 delta, something you can do in these particular positions would be on CL, would be to just buy the actual futures contract itself, depending on your buying power. So one of the things you can do is I could buy the actual future contract on CL. Now, this particular one is going to cost me about $12,000. So if you have the buying power, it's something you can consider doing. I'm going to stay in this trade, particularly on this. If I bought the futures, I would, if this continues to rise, I'm not doing anything till I get to the 30 delta, then I'll look at potentially what I have to do if I want to hedge it at all. The only real hedges for me would be to actually buy the future. I'm not big on, there's no sense in rolling a 25 delta anything right now. Volatility is up. This has moved decently. We're at 100, but the stock itself is still way down here at 88. So we're past 2 standard deviations away on this thing, according to Tasty here. So I don't think I'm going to do anything on this particular trade. You could buy the futures if we start to get closer to 30 delta. I could buy one of the futures on this and then let that go. If it continues to rise, the gains I'll make on the future will offset some of the losses on that particular strangle. So that's one way to hedge that, one of these strangles. I'll keep an eye on it. We'll see what happens. We have a second strangle on. This one's at 131% loss. There's not much I'm going to do on that one at all right now. It's not even in the ballpark. Once I get to about 180%, gets my attention, I start looking. We're also sitting on a 112 trade. Things, only been in play for 10 days, and it's up 34%. It's pretty nice, but there's nothing to do here. You're not taking off the naked puts, and I'm not taking off or closing or doing anything with the put debit spread. And then we also own 2 naked puts on these. Now, one of these naked puts is up right now 45.5%. If I'm taking them off at 50%, that one's already pretty close to wanting to come off. So we'll look at probably taking that one off for a nice gain. I've got another naked put here that's only been on for 1 day. This thing's up 16%. So that's a 16% winner in 1 day. So not too shabby on these at all. Nothing I'm going to do on those particular trades. And then I've got another 112 on CL. This one's up 50% in 38 days. If I'm taking a look at the PDS, okay, nothing going on here because we're nowhere near the trap on this. And the naked put's only at 47%. We have plenty of decay to go. We're only halfway through our decay at $900, so we'll make more money on that. So all good. I'm looking at overall portfolio. If I have to close something for a loss, I will. But right now, I don't have to do anything on those particular ones yet. All right, taking a look at ES. Hopefully that gives you a little bit of an idea. We've got a strangle right now. This one's down 50%. We've been in 34 days. Not much I'm going to do with that. All right, so we've got a December long-term 112 trade on here. The PD, now, this is a question I think Candy raised earlier. So when would you take off? When would you start to roll on your PDS, and what can you get? So let's take a look and see. What buying power would you use on a larger account? Just thinking when to close stuff for being, I mean, again, 50% is always the goal. So I always want to keep my buying power somewhere around 50%. Right now, I'm okay with 60% because volatility is extraordinarily elevated. When you're at new highs in VX, in oil, and in gold volatility, I'm okay with a little bit higher BP usage because I believe that volatility is going to revert back to the mean. That will bring us back to Earth. So we're not in any trouble here, but that's why I don't want to really exceed 50 in a lower vol environment. I want to be around that 50% max so that when things do expand like they are now, okay, you get to 70%, 60%, maybe 70% in very high vol. Then I feel totally fine. I think naturally it'll come back down before I have to make any adjustments. All right, so let's look at this 112 trade here. Let's take a look at what would we do. Now, obviously the naked put, I mean, this is a newer trade. The naked put's not doing anything. We're just entering the trap. So as soon as I see an at the or an in the money little sign pop up, meaning we're in the money on some part of the trap, that will get my attention. If I'm looking at this January one here, nothing's in the trap on the PDS. Yeah, the PDS is up to $300. I don't care about that. And then down here, this one's not in the money either. This trap is pretty far away for January 31. I mean, we're up, $100, and nothing to do. But this one is interesting. So the December 29th long-term 112 is interesting. Let's see. Right now you have a 50 wide trap. Okay, if I'm looking at a 50 wide trap, we've got a little math to go on here today. So 50 wide trap, I kind of came up with this little rule earlier today, but on a 50 wide trap, let's assume we'll use my 2 contracts because that's what I'm doing. So on a 50 wide trap with 2 contracts, okay, the max gain in that PDS is going to be $5,000, right? Yes, yes, and yes. So if we go into the trap, the PDS itself, the maximum at expiration for that PDS, if you're lower than the put debit spread, the maximum gain on that is 5,000. Plus, I'm going to take in the money that I made up here, which is about 2,800 on the naked puts. So that's where you get your total trap money from, is because I've got these naked puts. Now, I will be taking the naked puts off at some point in the future. So I'm not really worried about those right now. What I'm worried about is this trap. I'm 49 days into a trade. I have 71 days to go. It's a long time. My total gain right now is $1,000. Well, $1,000 on 5,000. For some of you, it might be great. It's really not going to serve me or do me a whole lot of good right now to do something to lock in $1,000 on this. What would I do? If I was going to follow my process of, hey, once you're in the trap, if we're in 30 days or less, or a week or less, maybe I would roll it down. So if I want to roll this down, we'll do a quick roll here. And we got to get these on the same expiration. So here's the roll. Let's roll it down 50% of the width. Okay. So we would roll right now. I'm going to roll from 43.50 down. Oh, actually, would only be rolling this down to 43.25. Sorry about that. All right, so there's the roll. The roll is going to net me right now $9. Okay, $9 is going to net me 900. $900. So 925 minus commission, about 916 on that. So if I roll this down, I am going to secure $1,000. Okay, so I'm going to get, so I know it's 916, but you get the point. So I'm going to roll it down. Let's say I take in $1,000 on that, and I'm still going to have then a PDS that's going to be 43.25, 4,300, because I've already rolled it down. That'll be the remaining PDS, which is going to be 25 wide. Okay, 25 wide times, 2 contracts is going to be 2,500. So the maximum I can now get in this is going to be 3,500. So of the 5,000 potential, I've locked in 1,000, and I have a chance to get maybe another 2,500 out of the trade. It's still not terrible. It's still more than 100%. But I don't think I want to take in just $1,000. I want to get at least, from a rough perspective, I'd like to get at least 25% or more on that roll of the maximum width of the PDS. Does that make sense? Oh, yes, maybe. So if I'm not getting at least 25%, because once I make that roll down, once I roll that down, 50% is gone, which means 50% of my PDS is gone, which leaves me with only 25 wide, which leaves me with only 2,500. So 2,500 is still not bad. It's still something you would take if you land in the trap. I'd like to get paid a little bit more than $1,000 here to do that. So it's something to consider. And if you want the $1,000, I'm certainly not going to fault anybody here. It's money in your pocket, and you still have a chance for a nice payoff of another 2,500. So your maximum will be 3,500 on top of the naked put money. So it's still good. You could do it. I just think we're a little far out, and frankly, I'm just bearish. Okay, if you watch any of my nightly videos, I'm bearish. Most of my posts, I'm bearish. I don't think this market's going anywhere in the next year, okay, except potentially lower. Can it spike up a little bit more? Sure. Can we go to 4,400, 4,500? Absolutely. Maybe even before Christmas that happens. I still think we're heading to a recession. I still think potentially we're down or we're sideways. Because that's my current direction, I don't know that I want to take this one off. So I hope that made sense here. But let's look at the newer ES one, or the older ES trades. Okay, so we've got an October 20. We've got a PDS here that is still hanging on. This one's going to expire tomorrow. Okay, so next year is going to expire. This one's going to expire tomorrow. Okay, it is not in the trap at all. I'm going to get Zippo
Yes.
for this one.
We actually got two things in the
I'm
mail.
going to mute whoever that is. Hang on.
Yeah.
There wasn't any.
Okay. All right. Everybody's muted again. All right. So this one expires tomorrow. Nothing to do here. That's just going to expire worthless. This one, okay. What did we do today? I believe we just closed this one on the session today. Let me take a quick look. I believe that was the one. But I think we closed the naked put on the October 31 trade. Just give me a second to make sure. So yeah, this one was done. Yeah, today. All right, so I did take the naked put off of this for roughly 95% winner. So all that's left is the PDS. This PDS has 12 days to go. Now, this PDS is up, okay? It's up right now $1,000. So now you have to think for yourself again, do I feel lucky? Do I want to, if I close, right, I've already closed the naked puts. I've already locked in the full 95% profit on this trade. Okay, I booked $2,100 in income today by doing that. $2,150 was what I took in. So I booked $2,150 in income. I could close this right now and book another $975 in income on this particular trade. It's not bad on a 50 wide. There's 12 days to go. I'm not even in the trap yet. Okay, but I'm making money and I'm not in the trap. Am I risking the bear escaping from the trap? 100% I'm risking it. I will not fault anybody for closing this and taking the $100 or the $1,000 and running. Okay. My goal on this was income. My bonus on this is the PDS. I'm okay risking the PDS because my goal was the income. I already made the income goal, $2,150, booked, got it in the account, realized income. I'm a happy camper. Okay. I think this is one that you guys would have to, it would be on the edge of, if you want to do it, I will not fault you for doing it. I want to at least hit the trap and I'm not there. Even though there's only 12 days to go, I'll give it a couple more days. If we start to leave the trap and I can grab 500 out of it, and I think that markets are reversing, I'll do that. And if I'm taking a look at the markets, overall, we've been in a downtrend. Okay. So when you're looking at the market, okay, this is where a little technical analysis. Yeah, there's a longer term uptrend here. Okay, and we're sitting right on it on the weekly. Okay, so this longer term uptrend on the weekly and then this shorter intermediate term downtrend. If this holds and we move higher and we can set a new higher high here, I'll start to think a little bit more on the bullish side, even though I know we're still technically in an uptrend. And this is still just a pullback in an uptrend. Okay. All right. But I'm really watching this. If we break below this uptrend line and we hit, just one more lower low, this is already 2 lower lows, 2 lower highs. If we break down, okay, then it's something to, then maybe I won't be as, I'll still be my bearish self, but I'll be a little bit more vindicated on that. So I'll feel a little bit better. So knowing that that's my assumption, I'm okay holding on to this. I hope that makes sense, that you got to have an assumption. My assumption is that we could be going lower. This whole war thing is causing some craziness in the markets as well. You got a gigantic mess in the House of Representatives. They can't elect a speaker, and who would ever want to be a speaker right now and get chewed on by and thrown out by 8 members of your party or something like that? That is a mess. You're going to come up into, you've got lots of important bills to pass. The administration is trying to fund Israel. The administration is trying to fund Ukraine. We got oil problems. We got inflation problems. We got all kinds of problems, and the government's going to shut down in this, in a couple of weeks, okay? Because you don't even have a Republican Party right now that's functioning. So nothing good on the horizon. Rates are still cranking higher. That's going to be bad for tech. knocking tech stocks down. My assumptions are lower. So now let's look at something else. So this is the new long-term 112. So what we did on this one today, now if you guys have the assumption that we're going higher, so if your assumption is, hey, we're in a bull market and you're, you know, a perma bull here and you think we're only going higher, then maybe you take these off. If you think we're going lower, then maybe you hold on a little bit. This is the new 112 trade from today. Why is it new? Is because we rolled the 4,400 down to 4,375 and we booked a profit. What did we book on that? Well, we booked 1250 on that. So 1250 on that gave us a pretty nice chunk of change. Okay, we made $1,250. Okay, because we had 2 contracts. We rolled it down 50% of the width. Okay, we booked $1,250, which was 25% of the $5,000 PDS. So I got my 25%, and I still have a PDS on that. I know these numbers are goofy, but we still have a 25 wide PDS, so we could still book another $2,500. I'm okay with that. I feel pretty good that I want to just leave it there. We are in the money on both of these, so there's no reason for me to cancel yet or want to get out, because we are nicely, not massively, but we're nicely in the trap. I've already rolled it down. My naked puts are at 60%. They're doing well. I'll just let this thing roll. So I changed it to new up here because that just lets me know that I had made a modification on the grouping. I kind of like this grouping thing. All right, now let's look at this FB 112. So the fat bastard 112. This was brought up today. What do we do with this one? Well, this is a really wide PD. So naked put, we don't worry about that thing. It's not profitable yet. So there's nothing to do. PDS though, I got it in the money. So I'm in some part of the trap. I'm not fully into the trap yet, but I'm at the top of the trap here. And I'm in by, about 40 points or so. Now this 42.25, is 115 wide. We talked about this earlier. So this is 115 wide. Interesting. So I'm 115 wide times 1 contract. Okay. 115 wide times 1 contract is what? 500 and is what, $5,750, I believe. So 115 wide times 50, 5,750. Okay, so I was right. So $5,750 is the trap on this one. Okay, 5,750. Would I roll some of this down? Possibly. So let's look, and there's the closing bell on the day. So thank goodness that this day is over. So let's take a look though at what if we rolled down, and I want to roll. What's the bottom of that? I think 42.25 was the bottom. So 42.25 is the one all the way up here. If we go halfway from where we are, halfway down, I'm going to book $2,550 in profit. Okay, which is basically what, $1,225. So I'm going to book $1,225 to roll this down on this FB. Not too shabby considering I didn't really pay for this trade at all. It was essentially a small credit to put this on. I'm going to take in $1,250, but my maximum was $5,750. 5,750. 25% of that's about $1,400. Not quite at that 25%. I'm not saying that that's your fast rule. If you like the fact that you could make $1,250 and still have, okay, what is this? 55 wide left. So I could take in $1,250, have 55 wide left, which is about another $2,600 in the trade. So you still could have a decent trade on. I would not fault somebody for closing this FB 112 right here. Hopefully this is making sense for you. Yeah, I don't like rolling down the whole PDS. Then I'm letting the bear out of the trap. When I roll the whole PDS down, now I'm no longer in the money. The bear's not in the trap, and at any slight move higher, I lose everything. So I don't want to move the whole PDS down because I'm moving the trap away from the bear who's in the trap already. I've already got him partially caught. He's in the trap. All I want to do is, and it's going to sound probably very poor. Okay, I want to take the leg or something here. I want to take the part of the bear, okay, and I'll make dinner for that. Okay, the rest of the bear I could let sit in the trap. Probably a gross analogy. You guys get it. But if I move the trap 10 feet away from the bear, he's no longer in the trap anymore. Why would I roll down the whole PDS and give him the chance to now escape? That means the bear can just run away because he's no longer caught. At least right now, the doggone bear is caught. And I like the fact that he's caught. The question is, do you want to book yourself $1,250 right now? Do you want to wait a little bit longer? We're just into the trap. We have 29 days to go. And what's my outlook? It's bearish. Okay. I could be 100% wrong. The market could reverse tomorrow, rocket up 200 points, and I get nothing. What I will get, okay, is the rest of my account will move higher. I will have missed out on this trade. It's tough. I really can't tell you guys what to do on your own. You really have to figure it out. And do that's right for you. So let's look at a couple other 112s. I hope this is making sense. All right, so the naked puts, nothing to do there. All right, so we're in the money partially on this particular one, but we're only making about $600 on this November 17th. Now this is a standard 112. Okay, this is not a long-term 112. It's a standard 112, and I know I'm throwing different stuff around. Okay, so on a standard 112. It is still a 50 wide. Okay. My maximum trap is 2,500 plus 1,800 that I took in here, about three grand or so. I'm only making 600 out of the 2,500. It's not even 2,500. It's 1,200, right? Or it's 50 wide, so it's 2,500. Okay. That's not enough for me to want to close this trap. Okay. I really don't want to roll this down because if I rolled it, quick roll, same expiration, okay, and we want to roll it down, okay, it's only going to net me $11, which is only going to be $530. It's not worth it to me. I don't think I'm getting enough value for my trap here on this 112, so I'm going to let it go. I put this 112 on because it was a shorter, the standard 112, because I want to add more trades to what I'm doing. I already have the long-term 112s. Those are going to generate my base cash flow. I'm in great shape. Love those. I'm adding additional 112s in here to give myself some additional ways to win. Right now, I am winning to the tune of $100. Not time to do anything yet. Now, November 30th, a little more interesting here on November 30th. Okay, this one's pretty well. Now I have two in the monies. The naked puts 23 up. I don't care about the naked put. Okay, so now I have to look at this trap. Now this trap, significantly more cash. Okay, so this trap is now up pretty good. This one's up, almost $2,000 on a 50 wide. Now I know I'm going to make $5,000 here. I've already got 2 grand. This one probably makes pretty good sense to roll. Okay, so I hate when Tasty can't keep up with what I'm doing here. But all right, so if we rolled this down 50% of the width, be somewhere around this, I'll mess it all up because I have other strikes on, right? Give me a second. Which one was this that we were fussing with? It's the November 30th, 4,400, 4,350. Sorry, reset. Okay, so this is where I would roll it down. If I roll it down half the width, 1,425 times 2, okay, this one's making roughly $1,500. Okay, I'm gonna make $1,500 out of the 5,000 that I could make. It is more than 25%. Okay, it's roughly 30%. It's very intriguing to potentially do that. It would still leave me with another 2,500 to put on. Why was I looking at this earlier? 86 from 67. That's the whole thing. So you could close the whole thing for $2,000, but if I rolled down, I could roll even further, or you can close the whole thing potentially. But the bear is in the trap nicely. Okay, right now we're at 20. You know, we're way up here. The trap is here. Okay, here's your trap. Okay, you're way in the trap. We have to actually run 50 points higher to get out of this trap right now. Man, this is a tough one too. I think this one though, I might consider taking this off. Now, I know there's still 42 days in the trade, but if I can book, I mean, I may let it go for a day or so. We'll see. But if I can book more than 14, 15 bucks, okay, I need more than $12.50 credit, because $12.50 credit is $12.50, which is 1/4 of my 5,000. I hope you guys are getting this there. So I need at least $12.50, in my opinion, to get at least 25%. So I'm giving up half of my profit. Make sense? I will still have a 25 wide on. If I roll down, I can still make 2,500 on that. And I'm going to get half of the 25, half of this top 25. I'll take in 12.50 on that. I'll get half of my half. Okay. So I still have 3/4 of my trap working, and I've already booked, or I still have half of my trap working, but I've booked half of a half. I'm probably confusing the crap out of people. But that's why I hope this makes sense. Say yes or no. And you don't need to all type, but I hope I'm making sense. That's why I'm rolling down. I want at least 25% of the trap when I'm farther out in time like this. If I don't get 25% of rolling down 50%, I'm not going to do it. Okay? It's just not worth the money. All right, and then we take a look at some other things here. Here's a BA 112. Yeah, there's some profit down. You know, you don't really worry about the naked puts on a BA 112 because they're so far down and they really have a tough time decaying. But you didn't really take in any money on that. Okay, it took in what, a whole 580 bucks to put this trade on. That's really not what I'm looking for. What I'm looking for here is, or no, I'm sorry, 50 bucks, $58, not 580. I took in $58, but this trade on, so I don't care about the naked put. What I care about on the BA is this trap. We are not near the trap. Nothing to do here. Even though it's up a fraction, I wouldn't do anything. And then this one's up 500 bucks. I wouldn't do anything. This hedge is now up 70%. This hedge is now up 2,156. That hedge is doing pretty doggone well. And if we drop further, this hedge is going to really start paying off nicely. I like this 60-day hedge that I have on. It's hedging this entire portfolio right now if we fall down. If we drop another 5% or so in the markets, which is another 200 to 300 bucks, we're going to be right at the top of this thing. This thing's going to explode significantly higher. So if I look at this hedge, this is the December 15th. So December 15th, these are 5 contracts. So that's the 3,900. This is where we are. Let's take a look and look at the analysis of this. Okay, here's the hedge right now. So here's the hedge. If we drop down here around 3,900, which is about another 10%, another 5%, I'm sorry. If we drop out 5%, this thing's going to be worth about $20,000. Okay, so you can see the P&L Theo on here, the orange T+0 line. That's going to be worth about 18,000. And if we drop any further down here, beyond that, now we're starting to look at 30, 40, and we'll max out at about almost $60,000 is the max on this thing, 65,000. Okay, totally fine. If the world goes to hell tomorrow and we drop down into this trap, we're going to realize profit. Actually, max profit on this thing is 90. So yeah, so 90,000. So if we drop down to about 3,500, we're going to make about $90,000 on this. That will more than pay for any strangles or any other crazy stuff that's going on. Love this hedge right now. It's doing exactly what I want it to do. It's up nicely right now. But if we drop 5% more, it's going to be up about 20 grand or so. And then if we drop significantly lower, we're going to be worth anywhere from $50,000 to $100,000, $90,000 on that hedge. Loving that hedge. And then we got a strangle down here. It's down 13% that I really don't care about. Okay, nothing to consider on that. All right. I know we'll go a little bit further on here. Gold. So here's some gold trades that we have on. Gold, pretty decent update today on gold. Remember, gold volatility ended up 11, almost 12% on the day. So gold volatility ended up at a pretty recent high. I mean, it ran 12% in one day. Okay, you're now at a 73% IBR. It's higher now than it's been 73% at a time in the last year. So you've got a very high IVR here, a very high volatility on gold. And my strangles, the worst strangle I have, okay, is down, it has a 1x loss. My other strangles, this strangle is almost profitable. It's flat, and this strangle's down 26%. Okay, love it. If I had some more BP, I think I would be putting, that was 5 contracts, Paul, on that PDS hedge. Okay, because I have to size it to take care of my portfolio on a 10% drop. Okay, so I need about $42,000 in income on a 10% drop to cover all of my stops. Okay, so on this account, 42,000 gets me there. So I size that strangle kind of for that. There's a couple other reasons I do it as well too. I'm sizing that strangle. Not only do I need to cover my stops on that strangle on ES here. Okay, not only am I covering stops on this hedge, okay, I'm spending money on this particular hedge. So this hedge at 12.5 times 5 contracts, okay, is going to cost me about what $3 grand or something. And I said I would, if I lose. Did I get that right? Anyway, so it cost me 12.25 times 5 contracts, okay, times 50 multiplier. So again, it cost me 3,000. I'm willing, which is 3,000 is 1% of my account net lick. Okay, so I put it on, specifically sized it, number one, to make sure I cover my losses. And number two, I sized this for a $3,000 buy, which is 1%. This is a 60-day hedge using 1% of my account. I will take this hedge off if I lose more than 25% of this hedge, okay, which is a $3,000 buy, okay, which means I'm going to lose $750. I'm willing to lose 25% of this, okay. I'm willing to lose the whole thing and lose 1% over 60 days. Okay, but that's really what I'm looking for is if we go the other way, I can close this hedge, okay, and move on. But I'm not going to take this thing off anytime soon because I love what it's doing for my portfolio. And if you look at this hedge too, okay, it's giving me a negative 244 delta. So this is worth a lot of negative delta for me right now. Anyway, gold here. There's when I put one on. If it hits a 25% loss, I will close it and I will open a new one. Okay, a 25% loss because I was willing to spend about $700 a month on some of the other hedges I was doing, which is 0.25% a month. I'm willing to lose 0.25% a month on a hedge that could cover all of my losses. Okay, and right now I've been in that hedge. I know we keep going back to the hedge. Sorry, guys. We've been in it only 8 days. 8 days, and we're up $2,100. That ain't too shabby. But I'm willing to go hopefully 30 days in there. And if I'm only losing 0.25% or more in 30 days, I think that's a good insurance policy to put on. So anyway, gold, I don't have anything to do in gold. All of my gold strangles are in great shape. The only strangles I got that are a problem are oil. Despite gold volatility running bananas right now, none of my strangles are even in the ballpark to even pay any attention to it. So because I'm not even at that 150, 160 level, I'm not too worried about it. If I'm in tasty here, and I need, so the December 26th strangle. Okay. When I want to group these positions, okay, Ashvin, you highlight the two, you're going to right click, you're going to go to group positions, okay, and then I'm going to name it December 26th strangle, the group, and boom, it groups it. Okay. So that's all you have to do when you're in Tasty is you just highlight what you want to group, right click, click on group, and then it'll group those positions. This is the greatest thing that they've done in a long time, even though there's still a ton of bad features on this thing. I can't wait till they fix the analysis screen. I can't wait till you can put in multi-legged futures trades. But until then, it's at least a nice feature. Next one here is copper futures. We got a 112 on copper. Okay, so 112 on copper. If I get time, I'll try to do that for you, Andy, here in just a minute. So 112 on copper. It's totally fine. I mean, I've been in it 10 days. I'm up 40%. There's nothing to do on the naked puts. They're at 32%. Okay, there's nothing to do here. We're nowhere near the PDS on this. So there's nothing to do. Just let this thing run, and hopefully we're just going to make some money in 60 days. So this is kind of, or this is actually only about a 45-dayer in here. We've been in it for 10 days. All right, ZB, this is a little bit of a bad position. And I talked about it earlier today. So one of my naked puts is down 164%. The other one is 265. Yes, I exceeded a 2x loss on this one. Why did I break my rule of a 2x loss in here? I did explain it, but let's go back through it a bit today so you guys can understand why I'm ignoring my rule for the time being. Number one, I sized this so small. This is right now a $500 loss. Okay, it's a $500 loss on a $300,000 portfolio, which is 0.0, which is 0.16. Okay, it's not a 1% loss. It's a 0.2% loss. Okay, so it's a super small loss. I'm willing to take a little bit larger loss on this thing in exchange for, number one, volatility and bonds reverting back, which I don't know if they will, but if bonds hold here. The other thing I mentioned today is I would be willing to roll this position out because I still think it's a decent position. We're at 107.24, and this is a 102. I'm still 5% away from my strike being breached. I'm not going to do anything until my strike gets touched. Okay. Yes, I'm going to let this swell up to a certain amount. Okay. If it gets to like a 2% loss, I would absolutely close it. Okay. However, I feel confident on this one that I'm really willing to roll or willing to take assignment. Well, what would happen if I took assignment on ZB? It would be the same thing as buying ZB. Okay, the buying power on that would be $4,200. Okay, I'm okay owning bonds at 102 on ZB, bond futures here on ZB. If we take a look at the bond futures and take a look out, this is if we take a look out even further, 107. This one's at, can't really tell what it is on here because it's kind of crazy. Still 107 or so. I mean, I still feel pretty good. Get rid of that thing on this, that I can take assignment for $4,000 and I can write calls on it. I can do whatever. I'm happy. I can roll out that actual futures contract to the next strike as well. So I'm going to hold on to this. It's one time that I'm violating my rules here, but only because I feel fairly decently at where I am. I think I'm going to sell some more on here. And then AMD and Meta both just took hits on this market swing. We were up on both. We were doing nicely, and then the market flipped on us. So that's all we got on that. All right. Last thing I want to jump into is how do I manage the future if it reverses against me? If I buy a future contract, I will try to get out of it for a break even. So if the market continues to go up and it's offsetting my losses, fine. As soon as that future reverses and starts to take on some water, I would close it, because that means that it's dropping back down, which means I should be then recouping my money on that strangle. It's tough. I can't get it to work well there. I think you need to be at least at 30 delta. To do that, I think you have to, really watch that future, but you could really get yourself into some trouble if it reverses heavily on you. Then you are losing on the future, but your strangle should be starting to come back in. I'm taking away money on my strangle, but I protected my upside. So yes, I would be giving away some of the money I would make on the strangle, but I'm protecting my upside. So I'm really looking at a break even on that. All right, in FB112, let's just do this quickly. It'll be the last thing we cover today. And how would I want to do this? So the last one that I did here was about a 60-day trade. And I don't have a specific, hey, let's go this wide, but I know I want to go wide. And I want to go as wide as I can. So I'm going to go out to about 60 days. And let's look at December 15th. Okay, so we're going to look at about December 15th, and I'm going to start to construct it as I normally would here. And normally this would be what I'm looking at on the debit. I'm probably going to go closer to like a 7 to 9 on the, and I don't really have, it's only the first one I've put on. So don't hold me to this, and I'm still playing with these FBs, but I'm probably looking at something between the 7 to 9 delta range. That would give me something that's going to cost me, let's say, 19 bucks. Okay. When we did this one, it's only about 9 bucks. So it was actually 19 because I'm cutting it in half. All right. So 19 bucks puts me in this range, and then going down to about half of that to about 9. So I know I'm not making a whole lot of sense on this, but probably still around this $10 mark. So let's say a $10, which is going to put me right now around 4 delta, but I want to pay or take in about 10 bucks on the naked put. Okay. 10 bucks on the naked put. And then how wide can I get up here? Can we get 100 wide potentially on this one? So let's just make these even numbers. Okay, and let's go 100 wide. All right, so we got 100 wide here on this particular one. That's costing me $14.50. And then I'm going to pay for this thing. And what did I take in on the other one here? I took in like $1.25. So I could probably sell something around 14 bucks. Okay, which happens to be around 6 delta here. Okay, so just to get a sense of what I'm doing, and then let's take a look at the analysis on this particular trade. Okay, so here's the construction of this thing. All right, how's it 14.25 credits? Okay, I'm about 100 wide. It's because put this on at 14 as opposed to 7. So let's go back down here again to under 10-ish. Let's just stick at 10. Okay, I still have a $6 credit, which means I could go wider on this thing. So what can I do to widen this thing out some more to where my credit is pretty small, because my initial credit was about 125. So where do I get a buck credit? Let's just say this is it. Okay. So let's look at this one. So here's the FB trade that I put on. That is a big looking hump there. All right. So $1.25 credit. So I'm getting paid some credit. It's only taking up about 3,900 in buying power. Okay. I wanted to make this as wide as possible. So I started with 100 wide, and I'm paying about 10 bucks. Sorry. Okay. I'm paying about 10 bucks down here for the naked put. So I got about a $10 naked put. Okay. I don't care what delta, it happens to be 4 delta. Okay. And then I'm going to keep widening this 100 until I get to about a $1.25 credit. Okay. Now, if we drop, and I liked the fact that I was moving some of the upper PDS up a little bit as well to try to keep that credit in mind. So I wanted to get it as close to this as possible. Okay. So I move, this is right now what, 120 wide. That's pretty decent. So it's going to give me a $6,000 credit in that hump. So this is a $6,000, essentially a hedge trade that's only just costing me buying power. It's not costing me anything to put this on. Okay, all the way down to 3,400 on the market, which is almost an $800 drop from here, from 42.97. It's a 19% drop in the market from here. So a 19% drop in the market from here. I like this trade. There's another FB trade. So my suggestion to you, when putting on the FB, and I'll try to write this up a little bit more, I'm going to sell right around a $10, two of them, $10 naked puts. Okay. And then I'm going to keep widening my 100 wide put debit spread until I whittle away all of that excess credit down to about $1 and change. And I also want to keep moving the top up as far as I can go, where I'm still making a credit. Okay. And I'm still more than 100 wide. Does that make sense? Did that help? Okay, perfect. So I think that's how I play for it. Is it a perfect setup? No, but I really like this trade. Look how flat this T+0 line is. I mean, you have to drop to 3,900, okay, which is 300, almost 400 points from here. You have to drop 400 points for this thing to even consider a loss on this particular trade. Okay, so you won't see any red for the most part for 400, 300, some odd 300 points to the downside. Okay, and this is only a 57-day trade, so you are going to start to see this T+0 hump start to build, especially if we start to drop in here. Okay, you're really going to start to see this thing. Okay, so yeah, it's a hedge by itself. Now, it's not the same as the other hedge that can make me $60,000 to $90,000. Okay, but this is a pretty nice little hedge. I mean, if you've got buying power and you think the markets are bearish right now, put it on, use some buying power. It's using $4,000 in buying power. Okay, on a $300,000 account, I got $150,000 in buying power. So what's 4,000 divided by 150,000? Okay, it's taking up about 2.5% of my total buying power. Okay, even if I was at 60% BP percentage or 65, even 70%, I'd be willing to put another 2% use in buying power to put this on and give myself even some more hedge if we go down. Now you can start to consider rolling these down. You can consider taking these off. There's all kinds of options you have to deal with the PDS. Don't really care about the naked puts so much. Okay, they're plenty far out. Okay, it's almost a 20% downside. So I think it's a low-cost hedge. It doesn't cost you anything. You actually got paid. You got paid for this hedge. Okay, you're taking in $1.30, $1.75 credit. Okay, if you want to even put it on for a debit, you could do that. Okay, so now it's a 55-cent debit. All right, so you put it on for a debit if you want, which means you make nothing, you lose $28 if it doesn't move at all. You want to be as close to zero as possible. I like just a little bit of credit. Okay, but okay, now it's a five, now this thing is a 5-cent debit. Okay, I would lose $3. Okay, and I'm not even using $4,000 in buying power. Okay, so it is essentially a free hedge. I mean, yes, there's downside possibility issues here, so it's not a total risk-free trade. Okay, but it's a pretty nice deal to put this on. I'd probably put some more on and keep it going. Delta is 0 on this trade, so it's a pretty delta neutral trade. but all 112s become delta negative as they age. Okay, so as you age, when you look at some of these older trades, okay, it's hard to even get into these. The newer trades, where's the most recent one? The most recent one is this January 31. Okay, look, this is $100. It's a 100 delta trade when I started it. 100 delta. Okay, then as it ages, they start to drop. The delta starts to fall a bit. Now, there's still about 100. But if I start to look at some of these older ones, okay, I know I've already modified some of these, so I got to be, but if I'm looking here, okay, now it's a 45 delta trade. After 30 days in, after 80 days, this thing's a 34 delta trade. You can't count the BA. This one's 45 delta trade. So they really start to drop. The older they get, those deltas are dropping. And if the market was actually going up or staying sideways, you would actually be seeing negative delta on this. So not only does the delta drop on 112s as they age, which is beautiful, but and especially when you take the PDS off of those trades, okay, now it is a 30, 32. This one's a now 132 negative delta in this portfolio. So I love the fact that I'm getting paid, on the 112s. They turn into more of a hedge as they age. The delta drops on these as they age, and then once you take the naked put off, now you have a completely negative delta trade. That's a hedge. It's a free hedge, okay, that you can adjust and get some money out of as well. So I think it's all good. I think those are things to keep an eye on out there. So I hope this was helpful. There's a lot of stuff this session. We are just over an hour. So I like doing this. I think this was helpful. You can check everything out in Discord, on the Discord channel as well. Some of you aren't paying attention, so let me go into the Discord channel. Okay, and let's just jump into our Discord here as well. Let me move some stuff out of the way. So if we're in our Discord, yes, we did create this Zoom sessions here. So what I will do every time I'm going to go live, okay, I will post in here what that is. I am going to start to schedule more meetings during the weeks. Probably do a little survey just to see best times, but I got to do it when I have the time. I'll try to do it when it helps for you guys. A lot of people are on this session here, so it's pretty good. There's a lot of people on most sessions, and they're recorded, so it's all good. I'm going to probably get closer to doing 3 sessions a week, small trades and not small account IRA trades, portfolio review, and then kind of a Q&A type of session like this one, where we just deal with a variety of subjects. I'm going to try to do 3 sessions a week. I will start to post that schedule in Zoom sessions here, and I will always post this. Again, you guys can always click on my link, at least for now, or I'll give you the actual Zoom link in there that you can click on, but this URL takes you to my Zoom room. All right, I also added a new channel in here on charting. So these charts are in here. So I've just posted a ton of charts. I'm not telling you what trades, I'm just giving you what's going on. Okay. If you take the chart and you decide, okay, based upon this, okay, what do I want to do? Is there a trade that I can see? Great. Place your own trades, put them in member trades, and do that. So I'm going to give you some more charts on here. I did remove 2 channels that didn't have anything in them. 3 channels today that didn't really have anything going on. And then as always, you can check out the Tom King trades here. If it's highlighted in white, I believe for you, highlighted in white would give you any trades that I've made moves on. So everything that's here right now, okay, here's that, or anytime somebody's posting and I'm responding. So here's that ZB put, and I explained what I was doing on this particular put, and I explained why I'm holding on to this contract in this put. So I'm dealing with individual trades. So you can follow what's going on, and what you need to do, okay, is you need to go here and you need to follow the post. And once you follow the post, you're always going to be notified when something happens. So all you have to do on these okay, is go and follow these posts. So when you're following, and I can click follow right now, I would unfollow here, but as long as you're following the post, you get notified that stuff happens in there. All right. So I hope this helps. Some new stuff in here. Keep an eye on the Zoom sessions. That'll highlight for you whenever when I'm going to go live. You'll see it ahead there, because I know sometimes you post it in chat here, and then there's 90 comments and posts of crazy stuff in here that stuff gets buried. So know how to navigate. Go to Zoom sessions. Also, you can go up here, follow any of these trades, and I hope that helped you guys out. All right. No updated tracking spreadsheet, because I haven't gotten to it, number one. And number two, got a couple of members that are creating their own, shooting me some samples of what they're doing. And there's some cool stuff. So I'm actually trying to make it kind of cool. A little bit more of a dashboard, some other stuff in there. So it's getting a little complex. Maybe I'll post two, but I'm going to have it updated. I really want to get to it this week. So sorry, I haven't done it yet. And also, Ashley, I know you've asked 900 times today about getting the links, getting my TOS set up. We've already addressed it in the main chat multiple times, but if you go to charts here, okay, I posted it in charts right here. So it's already posted in charts. And if you look at the pinned items in charts, okay, you can see that there's my link to my TOS settings for the weekly, daily one, not for the day trading version. But we did day trade nicely today for a nice 50% winner on 0 DTE. It's been working really, really well, what I've been doing in that. So anyway, there you go. There's the chart settings. They're posted inside charts, but they're pinned. So always check the pinned messages, and there's all kinds of stuff that you can see. All right. Yeah, Dave, if you want to request or comments on it, you can DM me on it. I don't tell most people to DM me because I can't handle 900 DMs. But yeah, if you got something specific, Dave, go ahead and just DM me on it, and we can have a conversation. Cool. All right, everybody, thank you very much. Let's get rolling. 4:30, markets are closed. I got to do some market wrap up with you guys. And you can see where everything is. All right. Perfect. Have a great rest of your day, everybody. Enjoy a good night. And again, stay safe out there in this crazy world. All right. Take care, everybody. Bye-bye.